From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB on this Monday. I'm Andrew Gagan. Great to have you with us here at AusBiz as we unpack the day. And yeah, look, it's been a bit of a sour day, really, given where it particularly looks as though we're going to end, which is pretty close to the session lows. The CBO 200 there currently down around 0.2%. And I guess what that's all about the material sector. We'll get to the sectors in just a moment, but that's been the big drag as far as those commodities are concerned. Also some players moving with Digico, that's falling, having debuted last week, and that's dragged HMC Capital down. Ventia is also in focus after it's become a bit of a target of the ACCC investigation too. Whereas a bright spot being Star Entertainment, coming off a very low base, mind you, but it has made a bit of a comeback in recent sessions. All right, it takes us to our three themes of the day. Monday Funk, yeah, well, it's not a great way to start the week, is it? What's happened to the Santa Claus rally? Where's that gone? Bitcoin bounced, meanwhile. Bitcoin hitting another record. The last time I looked, it was about 105,000 US dollars. And mixed China, some mixed data coming out of China, perhaps pointing to the need for further stimulus in that regard. All right, let's check the sectors, see how they have been performing. And as I mentioned, the miners being the big drag today on the broader index. Take a look at that. Typically the big ones, Fortescue down more than 4%, Rio and BHP off more than 2%, Mineral Resources similarly. And in fact, the gold miners taking a hit as well. Elsewhere in the energy sector, that also suffered with most of the large producers coming off, aside from Strike. And the REITs, another painful sector there with Mirvac, the worst of the performers there, down more than 2.5%. Catching up with the top stories of the day, and recent ASX Debutant and data centre play Digico has continued to fall in its second session on the ASX. Shares now well below the IPO offer price of $5. And David Depilla's HMC Capital, which holds a 32% stake in Digico, falling as a result. It's come off close to 13%. Elsewhere, shares in Ventia are falling as executives at the infrastructure giant were named in a case over alleged price fixing brought by the ACCC last week. Shares down currently 8%, to be down more than 18%, in fact, over the past 5 days. And the Lottery Corporation has appointed Horizon Holdings Chair Tim Poole as a non-executive director, subject to regulatory approval. Also movement there for Inghams, with Chief Executive and Managing Director Andrew Reeves stepping down from his role mid-next year, with the Inghams board endorsing the company's current New Zealand Chief Executive, Edward Alexander, as his replacement. Right, so let's get across what we did see in trade today. Henry Jennings joining us from Marcus today. Henry, welcome to Monday. Ho, ho, ho behind you, but not really on the markets. What's happened to the Santa rally?
It's ho, hum, hum at the moment. Yeah. It's humbug. Certainly very much Christmas Scrooge at the moment as we head into the final week really before Christmas. I mean, we've got Monday and Tuesday next week, but not expecting great shakes out of them. But certainly, we had some disappointing retail sales numbers out of China today as well, which did hit the miners, which had already been weak before those and just sort of really accelerated. And I think we're just seeing, to be honest, a bit of an exaggeration of or a continuation of what we've seen all year in terms of the miners being under pressure and the banks holding in pretty solidly, which has been sort of the nature of the business this year and today reflecting that. But it's a bit of a wishy-washy kind of day, a bit of a wishy-washy kind of start. Of course, we do have the Federal Reserve this week on Thursday morning our time, widely expected to be 25 basis points. And interesting news today as well about the RBA shake-up in terms of that new interest rate setting committee with the ex-CEO Marnie Baker there joining the team. So that is interesting, I guess. It seems as if the market, I don't think the market's really taking a huge amount of notice of that, but I think that's quite a positive move to get some experience on that new committee rather than just having one board.
Yeah, it certainly seems to be fairly well received, and to your point, I guess, getting some real world experience on the board there. Henry, you were talking about commodities coming under pressure, mixed data out of China. Of course, it was a couple of weeks ago that we saw a big bounce with China saying, look, they're going to bring more stimulus to the party, monetary easing. Yet, that's, yet to eventuate, really. So what do you think we're likely to see there, particularly as we head into the new year? What's the outlook for commodities?
Well, the outlook, I wouldn't say it's dire, but certainly sentiment is against it. But then again, sentiment was against the banks at this sort of time last year. So we've seen how that really can turn around. But it does need a catalyst. And as yet, all these stimulus measures that the Chinese authorities put into place have really not been enough of a catalyst. Last week's sort of measures, it wasn't enough in terms of whatever it takes moment that we saw from Draghi back in 2012 to really turn markets. The Chinese stock market hasn't performed too badly this year, to be honest. But unfortunately, as far as commodity prices are going, iron ore still stuck, looks as if it's still around 103, 104 there in Singapore. It's really having a detrimental effect on BHP, Rio and Fortescue, and that is a big part of our market. And the gold price also coming off as money goes into Bitcoin has hindered that sector today. So there's not a lot of good news around in resources. In fact, there's not a lot of good news around in the market. In fact, to be honest, there's not a lot of news around, full stop. And I guess to some extent that DigiCo performance in the last 2 days from what was going to be, the great white hope of the IPO market going into 2012 has been somewhat disappointing, and HMC taking a big hit today as well.
What does that tell you about the current market then, when, as you mentioned, there's so much anticipation of that float being so large, but it's been a fizzle?
Well, I think it has. I mean, it wasn't the cheapest thing in the world, and we've seen this before in these sorts of stocks when you're doing a lot of arm twisting, you're doing a lot of you better buy some of these because it's going to do us a favor sort of thing. And once it starts slipping towards the offer price and then goes below it, a lot of the weak holders, especially those looking to square up their books and rule off the books before Christmas, just dump it and get out and move on to the next one, lick their wounds. And it can sometimes overshoot. But what we have seen with IPOs that disappoint on day one, day two, or the first week is that they tend to take a long time to sort of recover that trust and that optimism that obviously was around pre-IPO, and I suspect DigiCo won't be any different.
So, Henry, as we sort of limp our way towards the end of the year, and you'd expect those volumes are just going to decrease from here, given Aussies take the early mark, don't they, when they head into Christmas? What do you reckon it's worth in terms of how you position yourself into 2025? Now, I mean, because I've spoken with your colleague, Marcus Padley, who's saying, look, you want to be exposed to the States. Do you want to lessen your exposure here in Australia?
Well, we're 2% of the world. The Americans are 70% of the world, and they hold all the cards and all the aces. And we are going to get a very pro-business administration. I think, one of the enduring images of 2024 is going to be Donald Trump, Time Person of the Year, ringing the bell at the New York Stock Exchange. And I think that's telling you something about what's in store for 2025, in that's the barometer of US exceptionalism is their stock market. So, there's always going to be opportunities here. And, to be honest, if you've been an investor in Commonwealth Bank this year, you've had a cracking year. And, it's up there with comparable sort of results from US stock specifics, maybe not NVIDIA, but certainly you've had a cracking year. So, there are opportunities here. I don't think we have to write off Australia and say, forget the Australian market, let's just go and play in America. That's much easier because, there will be a time when it is not easier. I think for the time being, we've seen this Santa rally peter out. And to be honest, usually the Santa rally does tend to come in the new year after Christmas. So, we could drift into Christmas, especially with the cricket on at the moment. There's probably more people interested in the cricket and doing lunches than they are with a soggy stock market. So, we could just drift into Christmas, drift lower. We might even hit, 8,100 maybe. Who knows? Where are we now? 82.40. We could easily hit 8,100 in the next week or so with the pace that we're going at. And then we could start to see maybe some new money coming in the new year. So that could perk things up. We may only just get back to where we are now. So, This is Santa Claus this year comes with the added bonus of Donald Trump. So it's not an ordinary Santa year.
All right, Donald Trump in a Santa suit, perhaps. Well, yeah, not a great start to the week, but there is always tomorrow, although I'm looking at NASDAQ E-minis. They're pretty much flat at this point.
Yeah.
Henry, great to catch up. See you soon.
See you soon. Thanks, mate.
Now, let's move on to our stock of the day. It was Ingham's this after Chief Executive and Managing Director Andrew Reeves will step down from his role mid-next year, and the Ingham's board endorsing the company's current New Zealand Chief Executive, Edward Alexander, as replacement. Josh Barker from RiverX and Nathan Somasundaram from Deep Data Analytics. Here's their take.
Like it as a stock?
No, not particularly. There's sort of a lot of new entrants coming into the market as well. So sort of KFC's dwindling down a little bit here in Australia. You've got things like Guzman y Gomez popping up all over the place. So we're sort of more in favour of those sort of names that are growing and picking up market share. Which Ingham's has got a really good foothold on a big industry, but it's not a huge growth industry anyway.
Okay.
Ingham is a bit different in the context that the family got out, private equity got in.
Yeah.
They, took the assets out, geared it up. It's a good business, but the problem is they've got saturation in the market. Unless you're doing something different, where's the growth going to come from? And that's the problem. It's a good defensive business. I think the management change is not going to really rock the boat. I think he's right. It'll probably be in the range trading level. It's not one we are excited about, but I think it should be okay in the current, look, you're getting a decent yield, but this is one where things are okay till something goes wrong.
Yeah.
But you don't get the growth play.
So let's check the market leaders as this settles on this Monday afternoon. Fisher & Paykel Healthcare, the pick of the bunch, really up close to 4% there. Star Entertainment has done well over the past couple of days, but as I mentioned before, coming off a very low base, how far it's fallen this year. SiteMinder up 3.5%, Healius and Bank of Queensland rounding out the top 5. On the negative side, well, as I mentioned there, HMC Capital with its big stake in Digico, it's down 13%. Ventia, with the ACCC having launched a price-fixing investigation into that company, down 8%. Some of the both lithium and uranium miners also suffering today. Boss down 8, Liontown 7, and Coronado off about 6%. In terms of the smaller end of the market, Murray Cod swimming against the tide, dare I say, for the broader market, up 12%. CBC Lynch, both up about 9%. DGL and Michael Hill International up 5%, whereas SomnoMed has fallen 12%. Kinetico and Black Cat down more than 11.3p, and Piedmont Lithium down 8%. So to the agenda overnight, look, not a lot happening, but we do get the US Empire State Manufacturing Index, and it is that week where we get a series of PMIs globally. We get the US S&P Global PMI for December. And tomorrow we get the Westpac Consumer Confidence Index for December. So a recap of where we're finishing then, the CIBO 200 finishing around 0.2% lower. And as we were talking about there with Henry, very much dragged lower by the material sector, with BHP down 2.5%, Rio 2, Fortescue 3%, big drags on the broader index. The gold is also coming off, and the financials finishing flat, and REITs and tech and energy also negative. So that is the COB for this Monday. Thanks for watching and listening. We'll do it all again tomorrow.